In this video, guys, we're going to look at which setups work a little bit better in volatile markets. Stay tuned. Hey guys, welcome to you. Thank you for joining me. Alright, so which setups work a little bit better in the volatile conditions? Now, again, my opinion, but I think that setups like these I'm going to show you now are bread and butter stuff. Nothing revolutionary here. We're not talking about super complicated things, but just a little bit more effective in these volatile conditions. Why do I think that's the case? Well, I think we have much more institutional money flowing in and out with urgency, and so we often get, rather than these kind of fake moves and stuff, when we get real moves, we often get really real moves. We often get really good moves. And so the classical way that you might trade intraday, or you might trade swing, which is like, hey, the market's a little bit stretched, let me take a little sneaky short for a retracement back, let me take this fake out trade. Just being careful of those. Now, not to say they can't happen, of course, but I think the bigger grade A type plays unusually are the breakout type things. Now, as you know, if you're a subscriber to the channel, but I appreciate if you are, you know that breakouts aren't really my favorite trade. They have to have a lot of things lining up before I will trade a breakout, especially we're talking the bigger markets like the indices, etc. Different for stocks slightly because the catalyst and the kind of people who are involved in the underlying trade flow. But I kind of prefer to see things fail and rotate back, and that tends to be my bread and butter stuff. But I won't rule out the right momentum play at the right time, of course, that goes without saying. But in this environment, the volatility really lends itself to actually rotating yourself back into more of a breakout trade. And the key thing about this, guys, is being very strict about when you take it, because the trap you can fall into is because the ranges are so big, you kind of see them as big moves. When in reality, when you zoom out, the chart is still the chart. Even though there might be a 700-point range on the Dow or 70-point range on the S&P, whatever it may be, you kind of go, well, actually, in reality, we're still in a range that we would be if we had a 200-point Dow range or a 20-point S&P range. So anyway, first thing, guys, is this triangle wedge type pattern. This has happened very frequently and has really resulted in some great trading opportunities. And that is, these, by the way, these swings may well be of the order of magnitude of 500 odd points. And in fact, they have been, if we're talking about the Dow, and then they get smaller and smaller, and then eventually it breaks out. And as we know with this kind of trade, this is the thesis is that this is institutional money flow coming into the market now, and that will continue because these guys have got a lot of money to put to work, and whatever they're using algos that are buying systematically with a VWAP time slice TWAP type thing, who knows, or whether they're putting orders in money, it doesn't matter. The point is money flow coming in. And so because we have this situation where the market is at such a key point, it's been hammered so much and we're so volatile, then people are making decisions with large sums of money. We wouldn't necessarily be making those decisions if we were kind of just tickling around doing not. Of course, we get big moves from time to time, but we're talking big moves now because there's potentially once in a decade opportunity. But maybe it's once every 5 years or whatever. But the point is, the move is so big. Is it going to be the short opportunity of the decade, or is it going to be the buying opportunity? That doesn't really matter. The point is, a lot of people are putting money to work or not. So when we get this scenario here, like a wedge pattern, a triangle pattern, when we get that breakout, it's worth looking at, it's worth considering. I'm not saying they're all going to work, but they tend to be stronger than you would get in the normal conditions. Into textbook stuff as well, which is great because most of us know the best ways of trading these, how to manage the risk on these. But just be mindful, guys, that these swings here can be pretty huge. So you've got to, of course, manage your risk and adjust your position size accordingly. All right, same kind of thing, just the flat channel. And we had this the other day, actually. It wasn't obviously not as symmetrical as that, but we had a scenario where, the highs and lows just couldn't be breached. They kept kind of tickling through, but then would rotate back down. And yes, potentially you could have traded mean reversion type thing, but bearing in mind that when we do break, we seem to kind of have a long break. For me, that's not something I like to do in these conditions. I prefer to try to align myself with where I think the money flow is going to break through one another. So bracketing the daily range, the 2-day range, even if that range is massive, as I say, it could be a huge range. It's still technically a range, and then when it breaks, normally, especially with volatile conditions, it's going to be a fundamental catalyst that causes it to break, which adds always more weight to the break. So the standard kind of flat channel, support resistance, breaking out of a range, guys. Obviously in this example, we're shorting to the downside as it breaks out. And there, pulling our stop wherever we want, and there's loads of different ways of trading that. We don't need to go into it too much in this video. The other one is once you've broken out, or if we're just in a trending type day, maybe we haven't broken out, but normally trends of this come out after a breakout, and you can flip it on its head actually, because there's loads of that kind of trading opportunity to the downside. But of course we get these rallies as well, and who knows where the market will be by the time you're watching this. Doesn't matter. The point is, moving average type pullback trade. If you're seeing a good institutional move, massive trend, big trend, you know, the standard plays, guys, are bringing up some moving averages, just letting them guide you, because that helps turn your thoughts off, hey, this just moved 200 more points, I could have got on this, to, hey, let's be more technical about this. Let this thing contract a little bit. It's stretched, regardless of whether it's done 600-point move or 60-point move in normal conditions. It's stretched. Let it contract, let it unwind, let things relax a bit, and then take a go at it there. You know, your normal play. If it touches the moving average, goes below, then comes back up, maybe take it with the stop below. Standard stuff, but being very mindful. Again, very mindful of the sort of ranges you're getting, the headline risk, all these other things. So summary, guys, the breakout type plays seem to be working better in volatile conditions. As I've said in other videos, you know, do not trade this if you feel that this is too much volatility, or there's too much volatility. Whenever you're watching this, just stand aside. You know, want to live to fight another day. We're not trying to be heroes here. When you go and you're putting your trading profits in the bank at the end of the quarter, your bank manager doesn't say, can you just tell me, I'll only accept this if you bought the coronavirus low or sold the coronavirus high. No, it doesn't matter. So if you have to sit this out and just learn from it and then come back into it when it calms down, then that is a very sensible thing to do. However, if you want to put some capital to risk and you want to take your own kind of thoughts on that and your own risk parameters, again, as usual, guys, no advice. It's just information, just things that I've observed. Then, and you've got a good risk management and you've got a good discipline. And these are the kind of things that seem to be working better in these volatile conditions. Take care, guys, and keep the risk managed. Bye-bye.